Preparing for a sovereign wealth fund investing at Kuwait Investment Authority interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to work at Kia? KIA is attractive because its mandate is not short-term trading. It is intergenerational capital stewardship. I would emphasize that I am motivated by investing Kuwait's surplus wealth globally, balancing return, liquidity, and risk across cycles. The role suits me because it combines macro thinking, manager selection, asset allocation, and governance. I would bring disciplined analysis, humility, and a long-term mindset, which are essential when managing sovereign wealth on behalf of future generations. While answering, focus on KIA's intergenerational mandate, Kuwait's surplus wealth, global diversification, and your fit with long-term investing, public service, analytical discipline, and governance-heavy decision-making. Question 2. What is a sovereign wealth fund, and how is it different from a pension fund? A sovereign wealth fund is a state-owned investment vehicle that manages national surplus assets. KIA's capital is linked to Kuwait's oil wealth and fiscal reserves, so the objective is broader than paying retirement benefits. A pension fund has defined liabilities and actuarial cash flows. KIA must preserve purchasing power, diversify away from hydrocarbons, and support long-term fiscal resilience. That changes the emphasis. Strategic asset allocation, liquidity planning, governance, and tolerance for illiquid assets become central. Make sure to cover the definition of a sovereign wealth fund, how it differs from pension or mutual funds, and why resource-rich countries use SWFs for diversification and fiscal stability. Question 3. How would you explain the difference between Kuwait's Future Generations Fund and General Reserve Fund? At a high level, the General Reserve Fund is closer to Kuwait's treasury account, supporting current fiscal needs and liquidity. The Future Generations Fund is the long-term savings vehicle designed to convert finite oil revenue into diversified financial wealth. In an interview, I would avoid guessing confidential allocations, but I would highlight the different horizons. GRF prioritizes liquidity and capital preservation, while FGF can accept more illiquidity and volatility to earn higher long-term returns. In your answer, talk about the different purposes of the Future Generations Fund and General Reserve Fund, especially liquidity, current fiscal needs, long-term savings, and intergenerational transfer. Question 4. How would you approach strategic asset allocation for a sovereign wealth fund like KIA? Strategic asset allocation starts with the fund's purpose, horizon, liquidity needs, and risk tolerance. For KIA, I would frame it around global diversification, inflation protection, and reducing reliance on oil-linked national income. I would then allocate across public equities, fixed income, real assets, private equity, infrastructure, and cash, using expected returns, correlations, drawdown risk, and liquidity constraints. The key is not maximizing one-year performance. It is building a resilient portfolio across regimes. Be sure to mention investment horizon, liquidity needs, risk tolerance, diversification across asset classes, oil revenue dependence, and how strategic allocation matters more than short-term tactical trades. Question 5. If KIA were selecting an external asset manager, what due diligence would you perform? When assessing an external manager, I would separate skill from market beta. I would review investment philosophy, team stability, process repeatability, risk controls, fees, capacity, alignment, and performance attribution across cycles. Strong recent returns are not enough. I want to know how returns were generated and whether the edge is sustainable. Operational due diligence matters too. Valuation policies, compliance, cybersecurity, and independent administration can be just as important as investment performance. While answering, focus on separating manager skill from beta, reviewing process, people, performance attribution, risk controls, fee alignment, capacity, and operational due diligence before allocating capital. Question 6. How does private equity commitment pacing work for a long-term institutional investor? In private equity, the capital is drawn over time, so commitment size is not the same as invested exposure. I would build a pacing model using target allocation, expected capital calls, distributions, NAV growth, and vintage year diversification. Overcommitting can be rational if distributions are predictable, but it creates liquidity risk and stress periods. For a sovereign investor, the discipline is maintaining long-term exposure without becoming a forced seller during market dislocations. Make sure to cover commitment pacing, capital calls, distributions, target allocation, vintage diversification, overcommitment risk, liquidity planning, and why private equity exposure builds gradually over time. Question 7. If oil prices fell sharply, how could that affect Kia's investment strategy or portfolio risk? Lower oil prices can pressure Kuwait's fiscal position, so the first issue is liquidity, not just portfolio return. I would assess potential withdrawals, currency needs, and exposure to assets correlated with energy or Gulf growth. A diversified global portfolio should reduce that shock, but stress testing is essential. I would also examine inflation, rates, credit spreads, and equity valuations, because oil shocks can transmit through multiple channels. In your answer, talk about oil price sensitivity, Kuwait's fiscal position, potential withdrawals, correlation with energy assets, liquidity stress testing, and why global diversification is central to KIA. Question 8. Explain duration and why it matters in a sovereign fund's fixed income portfolio. Duration measures a bond portfolio's sensitivity to interest rate changes. If duration is 5 years, a 100 basis point rise in yields implies roughly a 5% price decline before convexity. For KIA, duration is both a return and risk decision. Government bonds provide liquidity and crisis protection, but rise in rates hurt mark-to-market values. I would manage it through curve positioning, credit quality, currency exposure, and the portfolio's liquidity role. Be sure to mention duration, yield changes, price sensitivity, convexity, liquidity role of bonds, curve positioning, and the trade-off between protection and mark-to-market losses during stress. Question 9. How should a global investor think about currency risk and hedging? Currency risk matters because KIA invests globally while Kuwait's fiscal needs may be in dinars or dollars. I would identify base currency, liability currency, and the source of return, asset performance versus FX movement. Hedging can reduce volatility, especially in fixed income, but it has costs and can create liquidity demands. For equities and real assets, partial hedging may be better, because currency exposure can diversify macro risk. While answering, focus on base currency, liability currency, FX volatility, hedging costs, liquidity demands from hedges, and why hedging choices differ across bonds, equities, and real assets. Question 10. How would you value an infrastructure asset for a sovereign wealth fund portfolio? I would value infrastructure by focusing on contracted cash flows, inflation linkage, regulation, leverage, and concession life. A DCF is usually the core method. Forecast free cash flows, apply an appropriate discount rate, and test terminal assumptions. I would also compare transaction multiples for similar assets, such as EV/EBITDA or yield-based metrics. The biggest interview point is risk. Demand risk, regulatory resets, CapEx requirements, and refinancing can change value materially. Make sure to cover contracted cash flows, regulatory risk, inflation linkage, leverage, CapEx, DCF methodology, comparable transactions, discount rate selection, and sensitivity analysis for infrastructure investments. Question 11. What are the main risks KIA should monitor across a global multi-asset portfolio? For a sovereign wealth fund, risk management is not just tracking volatility. I would monitor market risk, liquidity risk, concentration, counterparty exposure, leverage, operational risk, and reputational risk. The portfolio should be stress-tested against scenarios such as equity crashes, rate spikes, dollar strength, and oil downturns. Good governance matters. Clear limits, independent risk reporting, and escalation processes help prevent investment views from becoming unmanaged exposures. In your answer, talk about market, liquidity, counterparty, operational, concentration, leverage, and reputational risks, plus stress testing, independent reporting, limits, and escalation under strong governance. Question 12. How would you perform performance attribution for a portfolio managed by Kia? Performance attribution explains what drove returns, not just whether the portfolio was up or down. I would split total return into asset allocation, manager selection, currency, benchmark effects, and timing. For private markets, attribution is harder because valuations are periodic and appraisal-based, so vintage year, sector, leverage, and realization analysis matter. Kia would care because attribution improves accountability and informs future allocation decisions. It also helps separate durable skill from noise. Be sure to mention allocation effect, selection effect, currency impact, benchmark choice, timing, private market valuation lags, and how attribution supports accountability and better future decisions. Question 13. If inflation remains high globally, how would you adjust your investment thinking? In a high inflation environment, I would first ask whether inflation is demand-driven, supply-driven, or currency-related. Then I would consider assets with pricing power or inflation linkage, infrastructure, real estate with rent resets, commodities, and selected equities. Nominal bonds may suffer if yields rise, so duration needs care. The mistake is making a single macro bet. I would build a diversified response and test sensitivity to growth slowing. While answering, focus on diagnosing the inflation source, protecting purchasing power, assets with pricing power, real assets, duration risk, commodities, and avoiding an undiversified macro bet. Question 14. How does fair value measurement under international financial reporting standards apply to private market investments? Under International Financial Reporting Standards 13, fair value is the price to sell an asset in an orderly market transaction at the measurement date. Level 1 uses quoted prices. Level 2 uses observable inputs. And Level 3 relies on unobservable assumptions. For a fund like KIA, this matters for private equity, real estate, and infrastructure valuations. I would emphasize documentation, independent review, valuation committees, and sensitivity analysis, because small assumption changes can move reported NAV. Make sure to cover International Financial Reporting Standards 13 Fair Value Hierarchy, Level 1, 2, and 3 inputs, private market valuation governance, independent review, documentation, and NAV sensitivity analysis. Question 15. How would you handle a conflict of interest in an investment recommendation? If I faced a conflict, I would disclose it immediately and follow the formal policy, not try to manage it informally. At a sovereign fund, integrity is part of the investment process because public trust is central. I would recuse myself from decisions if independence was compromised, document the issue, and escalate to compliance or senior management. Strong returns cannot justify weak governance. One reputational failure can damage institutional credibility. In your answer, talk about conflict disclosure, recusal, compliance escalation, documentation, public trust, reputational risk, and why governance standards are non-negotiable at sovereign institutions like KIA. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.